Assalamualaikum warahmatullahi wabarakatuh. To Professor Omaima and fellow friends, today my friend and I are going to present about the application of investment of stocks and shares in Bursa Malaysia, both conventional and Islamic stock. This presentation are going to be presented by me, Muhammad Aiman Hakimi, Syauki, Syawani, Izzati, Salma, Aish and also Alia. For the content of the presentation, we're going to start with the introduction, and then we are going to tell about the type of stock and also the shares, and also we are going to talk about shares in unit trusts and mutual funds, the exchange traded funds, and also the real estate investment trust rate, and will be concluded by me in the conclusion. Common stocks are a type of security that represent a corporation ownership. They were also known as common shares, ordinary shares, and voting shares. People who own company's profit or people who own common stock will have the right for the company's profit, as well as the ability to determine or elect for the board of director and also the company's policy. It also provides a higher rate of return over time. The purchase and sale of ownership shares in publicly traded companies listed on the Bursa Malaysia Stock Exchange is referred to as stock and share investment in Bursa Malaysia. Individuals can own a portion of a company and benefit from its financial performance through this type of investment. Conventional stock are the traditional form of stock investment in which profit and losses are determined by market forces and the underlying company's performance, while in Islamic stocks, they adhere to the Islamic finance principle and Shariah law, avoiding the interest-based transaction and also speculative activities, and also they operate on profit and loss sharing principle. Investing in Bursa Malaysia can access both in conventional and Islamic stocks through a broker, either through a conventional or Islamic brokerage account. Both type of stocks have the potential for high return, but they also carry a high level of risk. Before making any investment decision, it is critical to conduct extensive research and seek professional advice to reduce the amount of losses you may incur if anything happens.
Share or can be called as an equity, which is a kind of investment or type of investment that you buy a portion of ownership of the company itself. So the higher amount of share that you bought mean you have a lot of ownership of the company. So a share can be called as a unit of stock, which people mostly doesn't know the difference between share and stock, but this is the same. So when a company want to increase the capital, they can either apply for financing in Islamic bank or apply for a loan for the conventional bank, or they also can open up a share or they sell the share of the company in order to raise money for the operation. So even though they sell the share to the public community, doesn't mean the shareholder have 100% of the ownership of the company. As a corporation is a kind of unique sort of organization, even the stockholder doesn't own them. As the law itself regard the corporation as a legal person, as the corporate or the company can report their tax, can be sued, can borrow money, and also buy or possess a property. So moving on to kind or type of share that is in the Malaysia or the Bursa Malaysia itself, there are only two, which is a common share and a preferred share. So common share or can be called as equity share is served as an company risk capital, mean that the holder of the common share have the right in the corporation, including the ability to vote during the general meeting and partake in the company profit, or also appoint or remove some of the director in the company itself. So when the individual or directly partake in the company or the business itself, it might can lead to the loss of the investor fund if the businesses become unsuccessful. So another kind of share is a preferred share, which is a bit less special or can be, for other perspective people can be special, because preferred share is those that have the right to the dividend. For the common share, they also earn a little bit of the dividend of the company itself, but preferred share are going to get the dividend first, and the common share are going to get the remaining dividend of the year. So preferred share doesn't have the ability that the common share have, which is the ability to vote, to directly influence the company business, or to appoint or remove someone as a director. But when when it come in terms of solution or the company bankrupt, so the preferred share have given the most priority for their money first rather than other shares. So that is the two type of share in the Bursa Malaysia itself. So when for the company to be listed in the Bursa Malaysia itself, they need to undergo some requirement, as the Bursa Malaysia offer three kind of a market, which is the main market, ace market, and the lead market. So compare is for the ace market and the lead market, which can be less strict and mostly focusing on small business or SME business. But for the main market, they have their own criteria. So I want to talk about the quantitative criteria, which can be divided into three tests. First of all is the profit test, and the market capitalization, and the last one is the infrastructure project corporate test. So for the profit test, you need to have an unstructured profit for about 3 to 5 financial year, with the aggregate of after tax profit at least 20 million. So they need to have also after tax profit at least 6 million for the most recent financial year, and need to be operating in the same core business over at least the profit track record prior to the submission for being listed in the Bursa Malaysia. So for the market capitalization, so the total market capitalization for the company need to be at least 500 million when being listed. And also they need to have incorporate and generate operating revenue for at least one full financial year prior to the submission. And the last one is about infrastructure or infrastructure project corporation test, which they need to have the right and build or operate our infrastructure project either in or outside Malaysia, which the project cost must not less than 500 million. So they need to have the right or to build the infrastructure project that being awarded by the government or a state agency in or outside Malaysia, with the remaining concession of the license period at least 15 years from the date of submission. So then I want to pass to my friend about the Islamic share.
Thank you, Shauki, for your explanation. Next, I'll talk about Sharia compliant Malaysian stocks and equities in Bursa Malaysia. Basically, Sharia compliant stocks are stocks of public listed company that have been classified as Sharia permissible for investment based on company's compliance with Sharia principles in terms of its primary business and investment activities, as well as financial position. So on top of that, Sharia screening is a process of screening stocks in accordance with Sharia standards developed by Sharia scholars. Any stocks dealing with prohibited activities by Islam is out from Sharia compliant investment. The Sharia Advisory Council (SAC) use a two-tier quantitative methodology to categorize these stocks, which are the financial ratio benchmarks and business activity benchmark to assess the Sharia status of the listed securities. Companies whose primary businesses do not comply with Sharia are excluded through qualitative screening, and companies with mixed activities are subject to quantitative screenings in which non-compliant contributions are assessed against relevant benchmark. These two parameters will be used to calculate and compare the contribution of Sharia non-compliant activities to the group revenue and group profit before tax of the company. First is the business activity benchmark. It must not exceed the 5% benchmark for the following businesses that are involved with conventional banking and lending, conventional insurance, non-halal food and beverage, Sharia non-compliant entertainment, and other activities deemed non-compliant according to Sharia principle as determined by the SAC. Aside from that, the 20% benchmark is applicable to the following businesses like share trading, rental received from Sharia non-compliant activities, stockbroking business, and other activities deemed non-compliant according to the Sharia principles as determined by the SAC. The next benchmark is the financial ratio benchmark. It must not exceed 33% for both cash over total assets and debt over total assets. For the cash over total assets criteria, the cash only includes cash placed in the conventional accounts and instruments, whereas cash placed in Islamic accounts and instrument is excluded from the calculation. And for the debt over total asset criteria, debt only includes interest-bearing debt, whereas Islamic financing or sukuk is excluded from the calculation. These are some of the newly classified Sharia compliant securities that one may want to own, whether for the short or long term. Those who are interested can try to check the list of the Sharia compliant securities that is provided by the Sharia Advisory Council of the Securities Commission Malaysia or through Bursa Malaysia. Moving on to the next part, which is the performance of Malaysian, Islamic and conventional stock portfolios. According to the research, Islamic financial assets have outperformed their conventional counterparts. Even though many research shows that Islamic portfolios generate somewhat lower returns than conventional counterparts, which make conventional stocks more appealing, Islamic asset minimize systemic return and generates higher returns. Due to its risk-sharing method and ban on debt financing, investors believe that Islamic investment is the safest option. However, due to its lower benefits for diversification, conventional assets are preferred by investors when making investment decisions. Based on the journal article which discussed the performance of Malaysian, Islamic and conventional stock portfolios, it stated that in the overall performance of Islamic portfolio, ISP, and conventional stock portfolio, CSP, within the sector, in which ISP outperforms for a minimum 3 out of 4 measures for all sectors except the plantation sector. This indicates that the ISP outperforms 4 out of 5 industry. However, ISP and CSP perform similarly across sectors, with ISP outperforming CSP for the trainer ratio and beta measures, while CSP outperform ISP for Jensen's alpha and Sharpe ratio. The mixed result across sectors imply that the ISP decreased systemic risk, but the CSP diversifies the unsystematic risk to maximize portfolio return. So, according to the overall findings, an Islamic stocks portfolio is less risky and provide a higher return than conventional investment. For the next part of the video, it will be explained by Salma. That's all for me. Thank you.
Thank you, Izzati, for the explanation. Next, for the share in unit trust and mutual fund, it will be presented by me and Alia. So, I will continue first with shares in unit trust. Basically, unit trusts are collective investment scheme that allow investors with similar investment objective to pool their fund together. and usually this fund will be invested by professional fund manager in a portfolio of security according to the fund's objective and investment strategy. Importantly, we need to know that unit trust is established under a trust deed because it holds the investment on behalf of the investor as beneficiary of the trust. Worth to mention, the difference between Islamic unit trust and conventional unit trust is in Islamic way, it is must adhere to the principles, rules and regulation of Sharia law. So as a Muslim, we need to invest in Islamic unit trust. And generally, unit trusts are convenient and effective channel for long-term investor seeking wealth creation and preservation. Thus, investors should be focused, calm and disciplined in their investing approach. Next, if there are investors thinking of investing the money, unit trust is one of the ways, and there are a lot of advantage where the investor can enjoy peace of mind when they invest in unit trust, as they are regulated by Securities Commission. So, what is Securities Commission or SC? So, SC plays the role where they need to ensure unit trust management companies adhere to the guidelines. Not only that, but another benefit of investing in unit trust is diversification. Based on the Public Mutual Berhad, they stated that with as low as 100 ringgit, the investor can invest in a unit trust fund that is diversified across various company, region or sector. Worth to mention, unit trust also doesn't require close monitoring 24/7 because it is professionally managed by funds manager with the support of analysis and research team. Not to add, while unit trusts are typically not listed, they still maintain a high degree of liquidity, where investors can usually enter or exit their investment on any business day. When they choose to buy or sell a unit trust, they will take the next available price at the end of the trading day. And last but not least, this unit trust also can provide the investor with access to asset or market that might be difficult or expensive for them to invest directly. Generally speaking, the type of investment that we choose will determine the degree of risk that is involved, and unit trust is one of the investment that have a lower risk due to its widely diversified portfolio, as I stated earlier. Nevertheless, we should not think that if it lower, then it is a riskless investment, because it is crucial for us to study the risk in order to make sure it is well aligned with the risk profile. Funds manager performance risk might occur if a key member of the fund management team decide to leave during the investment period. We know that the unit trust funds are professionally managed by the funds manager, right? So if there's no good and great manager, then it might affect the process of investment. In fact, it is difficult for the investor to determine whether the other fund manager is going to be able to deliver good result, even though the investor may refer their track record as guidance. In the other hand, the manager also might become insolvent or default on its obligation, which make the investor may not receive back any of their investment monies. The other risk that might happen in the unit trust investment is equity investment risk. After doing some research, we found out that the overall market situation can cause many internal and external factors that can affect the value of unit trust if the investor invests in equities. Importantly, investor must know that no matter how diversified the equity portfolio, the investment will not be free from the market risk. For instance, in the Eurozone debt crisis, even though it happened in European countries, the impact rippled through the entire global economy, which is include Malaysia local market. That's why before you invest your money, you need to do some research first. For the next slide, I will explain about unit trust in Maybank. Maybank offer investor some unique feature of unit trust, such as there are various asset classes like money market, fixed income, property, equities, and also commodities. Not only that, but the investor also can apply the unit trust online like Maybank to You. In Maybank to You, it provides many services such as viewing an investor unit trust account summary based on their latest available net asset value, or it can be called NAV, and they also can viewing the status of investor unit trust transaction for the last 90 days and performing switching of existing fund to the other fund under the same manager. So that's all for my part. I will pass next to Alia to explain about what is mutual funds.
Next, I'll be explaining about mutual funds. A mutual fund is a kind of investment vehicles that pulls money from shareholders to buy securities including stocks, bonds, money market instruments, and any other assets that listed. Mutual funds aim to increase investors' capital gains or income, and professional money managers that administer mutual funds distribute the assets. The layout and the maintenance of a portfolio reflect to the investment goals that is stated in a mutual funds prospectus. And access to professionally managed portfolios of stocks, bonds, and any other securities is made possible for small or individual investors by means of mutual funds. The funds gains or losses are consequently distributed proportionally to each shareholder. Mutual funds also investment that is formed using a pool amount of investor capital that holds a variety of securities including bonds and stocks. And however, a unit trust differs from a mutual fund in that it is created under a trust deed and the investors is actually the trust beneficiary. Next is the differences between unit trust and mutual funds. While it depends on the status of the market of a unit trust fund, the stability of an investment in a mutual funds is dependent on the fund manager itself. But unlike some mutual funds, unit trusts do not have a lock-in period for mutual funds. And in addition to that, mutual funds usually consist of a variety of unique securities that are combined and traded on a stock exchange. And on the other hand, unit trusts are financial instruments that frequently consist of a group of securities that are not listed on the stock exchange. Though the risk is greater, mutual funds frequently provide larger returns than unit trusts. Also, a unit trust fund collects funds from investors to achieve a certain financial goal. The fund manager then takes the money and invests it in a variety of bonds or shares. While a mutual fund and a unit trust are similar, their legal structures are different. A unit trust basically, which is a non-investment firm, can only issue units as opposed to a mutual fund which can issue redeemable shares. Next are conventional mutual funds and Islamic mutual funds. Islamic investment funds are also known as a Sharia mutual funds, are mutual funds that are operate in accordance to the laws of Islam or Islamic law, based on Islamic law, both in terms of agreements between investors and investment managers and between investment managers and investment users. Conventional mutual funds are free to invest in a variety of investment products offered by businesses operating in a variety of industries. But Sharia mutual funds don't differ all that much from conventional mutual funds. Basically, it depends on the management approach and the investing rules employed the investment. So next, for the conventional mutual funds investing has a number of advantages, especially for those who would prefer to avoid the demanding, the time-consuming process of studying companies, placing execution orders with brokers, and then keeping track of a stock price fluctuation, and many more. But basically, in general, mutual funds can hold a wide range of investment in a variety of markets that offering a level of diversification that is generally only feasible with larger portfolios. The performance of the fund as a whole is less impacted by the ups and downs of any one security due to the large range. But while it can help reduce risk and increase the stability of an investment, diversification does not offer less mitigation. And lastly, Islamic mutual funds. The investment strategy of Sharia mutual funds is based on financial instrument with halal management practices. Halal refers to the prohibition of conducting business in a way that runs counter to Islamic values by enterprise that issue investment instrument. The laws and the principles of Islamic law are followed by mutual funds that operate as such. Islamic mutual funds work similarly to conventional funds with the distinction that they can only use to invest in securities that comply with Sharia derivatives, and companies with high amount of debt are not included in their funds. And they also stay away from investment in fixed income securities. And moreover, this fund, Sharia Islamic fund, are open to investors of all other faiths, that only Muslims are excluded. And furthermore, riba or money interests are strictly prohibited for Muslims. This is forbidden according to the Quran, because anyone who does it regarded to be odds with God. Muslims are not allowed to invest in businesses that are blatantly practices riba for the same reason, and therefore these funds prevent any kind of interest. A Sharia board that is appointed avoid these forbidden sources of income by donating the money to the charity. These funds often avoid taking on too much risk. And I believe that is all from me. Let's continue with Aish. Thank you.
Hi everyone, I'm Aish, and for the presentation, we will explore the world of ETF and application of that to invest in Bursa for both conventional ETF and Islamic ETF. So we will share with you the magic that makes ETF efficient. So investors sees the exchange traded funds as one of the most innovative financial products, consisting of only the best open-ended funds and listed stocks traded on an exchange such as Bursa Malaysia. ETF also frequently compared to old-fashioned mutual funds, with the only major differences being that ETF are listed on the stock market. So stick around for that. Our journey has to start with somewhere, and that's with the basic of an ETF. So what is ETF? Well, first, ETF is acronym that stands for Exchange Traded Fund, and that basically tell us it is an open-ended investment fund listed and traded on a stock exchange. So ETF combine the features of an index fund and a stock. So the liquidity of an ETF reflects the liquidity of underlying basket of shares. So few types of ETF are equity ETF, leverage and inverse ETF, fixed income ETF, and commodity ETF. So this ETF consists of baskets of stocks, bonds, futures, or commodity based on the index, which instantly offers broad diversification and avert the risk involved in owning stock of a single company. However, this ETF cost will be decided by a fund net asset value (NAV), which includes the market value of its underlying stock and any unremitted net income, and the market price for ETF are typically quite similar to one another. When you want to invest in ETF, the most important things to do is when you go to the Bursa website, you must see the objective of it. What is the advantage of it? First, I put here One of it is diversified exposure. For example, like unlike the individual shares, ETF hold a basket of securities with this objective of getting the performance of an index. So this basket can be made up of shares, bonds, futures, or commodity depending on the index that the ETF is based on. So instead of like holding a few stocks or bonds, investor can use ETF for exposure to a diversified basket of investment products. Next is cost effectiveness. Why? Is because like lower annual management fees for ETF compared to like unit trust makes ETF economical to buy and to maintain in the long run. The next one is simplicity. So ETF are listed on the main market of Bursa Malaysia, which is similar to stocks, and the buying and selling of ETF units are done based on its current market price in a single transaction, and these trades can be done online on the Bursa website or through stockbrokers. Next one is transparency. Investor can know exactly which stock or underlying asset is held in ETF by visiting the ETF website provided by its the manager or the ETF announcement itself on the Bursa website. So the list of ETF constituents is updated day to day. Move to the Islamic ETF. So what's the difference between Islamic ETF and conventional ETF? So conventional ETF and Sharia compliant ETF differ mainly by their benchmark index tracking. So Islamic ETF benchmark index tracking would only track constituents of the index that are from Sharia compliant securities, and it is not permissible to track Sharia non-compliant securities. So Islamic ETF are carefully to ensure that Sharia principle and Sharia compliant investment guidelines are followed. So as such as the operation process of Islamic ETF is overseen by Sharia board with the committee of advisor conducting regular audits and review to uphold the correct practices. So what's the requirement of Islamic ETF? In order to be qualified for Islamic ETF is like all funds must go through a Sharia screening process following the methodology of stated by the Sharia Advisory Council, which is SAC of Securities Commission Malaysia, and they must like going through periodic monitoring which is necessary in case of any significant corporate changes such as mergers and acquisitions, delisting, and even bankruptcy, all of which will affect an Islamic ETF. The screening and monitoring process also includes purification. Purification means the process of identifying and separating Sharia non-compliant income before donating it to charity. So why you invest in Islamic ETF? Why we need to know the advantage of Islamic ETF? So it is important to understand the advantages that investor can benefit from. It is equally as crucial to bear in mind some of the risks and potential drawbacks that can arise from investing in Islamic ETF. So Islamic ETF are relatively similar to unit trusts. So the main difference being that they are listed and traded on stock exchange. So with these differences, investors tend to feel more comfortable investing in Islamic ETF as its constituencies replicate the performance selected Sharia compliant market index. So more reason to invest in Islamic ETF is one, Islamic ETF are cost effective. As I put here, for example, is investor have the opportunity to have a stake in a cost-effective future investment in which most of the funds are passively managed with the considerably low management fee. second one is Islamic ETF are transparent. Means that all Islamic ETF pricing is easily accessible, available throughout the trading day. You can see, and the fund manager website will have updated information such as like daily fund value and quarterly report for Islamic ETF. Number 3 is Islamic ETF are widely diversified. Means that investors are given the right amount of exposure to companies that make up the track index by simply investing into one unit of Islamic ETF. And the fourth one is Islamic ETF are flexible. Means that investors have increased accessibility through online trading and stockbrokers. So means that investor can trade Islamic ETF anytime throughout the day at their current market price and have access to price as it listed on Bursa Malaysia main market. So as you can see in the slides here, Bursa Malaysia currently has like 6 Islamic ETF listed and traded on the exchange. So these 6, to determine the exposure, investor will need to look at its underlying benchmark or the assets held in the ETF. So for example, like Asia's first Sharia compliant ETF, which is like my ETF DJIM25, trades on Bursa Malaysia, and this indicates that my ETF DJIM25 holds shares of 25 leading Sharia compliant listed companies in the country.
Assalamualaikum. So next I'm going to present about REITs and Islamic REITs. Firstly, REITs. A major asset class in a portfolio of investment is real estate or property. Prior to the creation of REITs, an investor would typically purchase real estate related equities or physical landed property to gain exposure to the real estate market. Investors now have the option to purchase REITs for a small portion of the cost of the real estate. To put in another way, REIT offer a means of investing in high quality large scale commercial real estate without having to purchase the properties yourself. Customers can often find a steady income stream and appealing distribution yields from REITs. And a fund or trust known as a real estate investment trust, or we call it as REITs, owns and oversees commercial real estate that generates revenue such as shopping complex, hospital, plantation, industrial properties, hotel and office blocks. A REIT's management business is allowed to deduct shareholder distribution from its corporate taxable income. However, in order for REIT to benefit from the tax-free status, the majority of its asset and income must be related to real estate, and it must be yearly distribute at least 90% of its total income to investor and unit holder. When REITs are listed on a stock exchange, they will trade similarly to stocks. There are benefits in investing in REITs, such as affordability. REIT investments are less expensive than direct real investment. Customers only need a small initial investment to get started. Besides that, when compared to real properties, REITs are more liquid. Since listed REITs units are traded on the stock market, they can easily be converted to cash. Other than that, REITs frequently distribute consistent earnings, which are obtained from current rentals paid by the tenants who use the REITs building and are comparable to dividend. To add on, through a REITs, a high quality and reasonable price investment, customer can gain advantage of owning a sizable real estate on a pro rata basis. Last but not least, the fact that the REITs and its underlying assets are managed by experts who will add value for a greater yield benefits to the customer. The example of REITs that are listed on Bursa Malaysia are Pavilion REITs, Quill Capital Trust and Starhill REITs. Next, I'm going to present about Islamic REITs. Investing in real estate through a real estate investment trust combines the greatest aspect of both trust funds and real estate. The Sharia compliant REITs is known as I-REITs. Guidelines for Islamic real estate investment trusts were released by the Malaysian government in November 2005 through the Securities Commission Malaysia, providing a new standard for the creation of the instrument and making Malaysia the first country to do so. These rules offer market participants advice on Sharia compliance in creating and overseeing an IREIT. The existing guidelines on real estate investment trusts are supplemented by these rules. In contrast to the conventional one, the income of IREITs must come from the halal activity, or in the event of mixed operation, adherence to the 20% standard set by the Sharia Advisory Council of Securities Commission is required. The example of the activities that are forbidden under Sharia is gambling and gaming, producing or selling non-halal goods or goods associated to them, conventional insurance, financial services based on riba, acts for entertainment that are prohibited by Islamic law, manufacturing or selling products derived from tobacco or related products, stockbroking or trading in assets that do not comply with Sharia, and lodging establishment. In addition, a Sharia committee or advisor must be chosen to counsel the fund manager on issues related to Sharia compliance. Both REIT and IREITs are treated similarly with regard to stamp duty, real property gain tax, and corporate tax in Malaysia. IREITs is a rewarding investment since it offers a diverse portfolio of assets, generating returns and distribution for rental income as well as capital appreciation. By investing in a variety of real estate and assets related to real estate, investors can diversify their risk profile. IREITs will deliver a significant dividend payout to unit holders in addition to that. And IREIT also transfers 90% or more of its total income to unit holder in order to be eligible for tax transparency status. IREITs also offer consistent returns as well through rental income and capital growth, and IREIT is physically able to produce stable, sustainable income that can be used to continuously pay out regular dividends.
Investing in Bursa Malaysia stock and shares allow an individual to own a portion of publicly traded companies and potentially benefit from their financial performance. The exchange offers both conventional and Islamic stocks, each with its own set of principal and investment characteristics. People can also invest in exchange-traded fund and real estate investment trusts to spread their risk amongst other investors. Before making a stock investment decision, an individual should conduct extensive research and understand the risk involved. Consulting with a financial investor, advisor or broker can also help to ensure that investments are in line with personal financial goals and risk tolerance, which will assist an individual in selecting the best investment, which not only limit the risk but also increase the wealth that can be generated by an investment. While investing in Bursa Malaysia stock and shares can be viable long-term wealth building strategy, it is important to remember that past performance is not guarantee of future returns. Diversifying portfolio and reviewing investment on a regular basis can help manage risk and increase the likelihood of successful investment outcome. That's all from us. Thank you.